Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now the Bitcoin price is trading below some significant support because just recently over $500 million worth of long positions were just liquidated, and this is helping the decline in the funding rate right now. So in just a moment, I'll be explaining all of that, and I'll also be giving you my next price targets for Bitcoin. So definitely make sure you're watching all the way to the end of this video so that you're not missing out on any of this important information. And just before we jump into it, make sure to drop a like on the video down below. And if you're new to the channel, you might as well subscribe with notifications turned on for more updates just like this every single day. But anyway, with all of that out of the way, let's get straight into what this video is about. So right here, we're on the Bitcoin US dollar chart on the 4-hour time frame, and what we can straight away see is obviously Bitcoin has broken below that $60,000 level of previous support, which would now potentially be acting as resistance. But of course, we haven't seen a retest just yet. But what we have seen so far is a 4-hourly candle close below support and a pretty decent spike in volume, at least on the 4-hour chart. So those are two confirmation methods that I pay attention to when confirming a break of a significant level. And of course, the third confirmation method is simply just seeing a retest, but we don't necessarily need to see that. It's just if we do end up seeing a retest and a successful rejection, then that would simply be extra confirmation that we are heading lower. Now, first things first, over the last 4 days, I've been letting you guys know that I've been focusing on the $60,000 level of support and this band of resistance starting at around 63,000. And if you've been watching my Bitcoin videos over the past 4 days, I've been mentioning the potential head and shoulders pattern that is currently forming on the 4-hour charts, but right now that pattern has completed and we've seen a break below the neckline. And for the beginners out there, this type of pattern is a bearish pattern. And considering the fact that we have now broken the neckline, let's take a look at the technical price target for this pattern, and that's coming in at around $53,000 per Bitcoin. So does that mean the Bitcoin is definitely going to 53K? Well, not necessarily, because we also have some other important support levels to pay attention to. For example, another important support level that I have been mentioning for quite a few days now on the channel is this previous range of resistance coming in between $57,000 and $58,000. And if you look at the recent dip for Bitcoin, so far we have found support at exactly $58,000, which is the top of that range of support. And of course, that's nothing new for the subscribers out there. Just like how that head and shoulders pattern is nothing really new. We were looking at that potential scenario for over half a week now. But other than that, support's coming in between 57 and 58K and the price target coming in down towards 53,000. What we have is, of course, some Fibonacci levels to pay attention to. Just bringing out the fibs on the chart, what we can see is, first of all, we have the 38.2% Fibonacci level, the second most important Fibonacci level, coming in at pretty much exactly 57K, which is very interesting because that's obviously the bottom of that range of support that I was just talking about. And anything lower than 57K, we have the 50% retracement level coming in at around 54,000, which is just above that technical price target, obviously coming in at 53,000. And also what's interesting about 54K is we've previously found huge support at pretty much that exact level at 54,000. So basically, they're the important support levels that I'm currently paying attention to. Just to quickly recap, initially 57 to 58K, and anything below 57K, then I would be looking towards 53 to 54,000. And also what's interesting about that $53,000 level, that is not just the technical price target for this head and shoulders pattern, but zooming out a little bit further on the chart, that was this previous high that we formed in the beginning of September. So that was massive resistance for the Bitcoin price, which now that the Bitcoin price is above 53,000, that should be acting as major support. So either way, whether we see a bounce towards 57 to 58K, or if we drop down towards those lower support levels towards 53 to 54,000, I will be accumulating a little bit of Bitcoin at both of those levels. So if we end up seeing a bounce sooner rather than later, then at least I would have taken advantage of this opportunity. But obviously, I'll not be going all in at the 57K level, just in case that we do end up seeing a break below that level just there, down towards around 53 to 54K. Because as I just mentioned, if that plays out, I will be accumulating even more Bitcoin. So essentially, I'm treating this entire pullback as a buying opportunity. Of course, that's not financial advice, but when you're simply zooming out on the current trend that we are in, regardless of whether we bounce right now or even if we dip all the way down towards 53K, when you're zooming out, Bitcoin is still in a very strong uptrend, even if we continue to see more bearish price action. Obviously, if you're looking back in September, that was a very bearish month for Bitcoin, and a lot of people were panic selling Bitcoin, especially towards the end of September. And while we were sitting in extreme fear at that stage and everyone was panic selling, I was letting you guys know that, hey, that is actually a really good time to be buying in. Obviously, not financial advice, but if we're in an uptrend on the bigger picture, these short-term pullbacks really do make for some great buying opportunities. Now, if you're asking about how long we could stay in this short-term pullback before we finally start recovering, well, if you're talking about a recovery up towards the all-time high, obviously that's very hard to say, but in the most bullish scenario possible, it will still likely take longer than a week for the recovery back up towards those higher levels, but possibly a few more weeks if we do end up up seeing a similar situation as what we saw during September. But for me, as a part of my Bitcoin strategy, it honestly doesn't matter whether we're going to recover in a week or even in a month. And if anything, the longer we take to recover, the bigger opportunity we have in our hands. And now it's important that we take a look at some levels of resistance, because obviously at some point we will see a bounce. And our first major point of resistance to the upside at the time of filming this video is coming in at around 60,000 US dollars, because obviously that was previous supports back here. And also that is the 100 exponential moving average on the 4-hour chart, which if you're looking back in August 2021, this exact EMA provided huge amounts of support for the Bitcoin price during the uptrend. And then the moment we broke below, we started to find a little bit of resistance around that EMA until we finally saw a strong break back above it. And that strong break back above the EMA signaled to us that the next leg to the upside was beginning. So that's the first important level of resistance that I'm looking at right now at around 60,000 US dollars. And anything above that, obviously this range of resistance coming in between 63K and 65,000, because we saw yet another rejection from that range of resistance as expected. And obviously this range of resistance is nothing new for the subscribers out there. In fact, I was talking about this range of resistance around 2 weeks ago before we even found that first point of resistance. And over the last 12 hours, $700 million worth of trades have been liquidated. And just going down here, the majority of those positions were of course long positions, because the price has headed to the downside. So the recent price action over the past 12 to 24 hours has basically been a small long squeeze, which for the beginners out there, it's basically flushing out the over leveraged long positions, which will help reduce the funding rates across exchanges. Because over the past week approximately, especially when Bitcoin broke into the new all-time high, we saw the funding rates across exchanges absolutely skyrocket. And when we see that, it's actually a bearish sign, because the more positive that these funding rates go, the more expensive it becomes to maintain a long position. And I got a couple comments on my recent videos asking me to explain why that's the case. And I've explained it in more detail in previous videos, but I'll quickly explain it for the beginners out there. Basically, if we see positive funding rates, the long positions pay the short positions. And if we see negative funding rates, the short positions pay the long positions. And the reason why this is even a thing, it's because it acts as a mechanism to balance out the market during an overly bullish time or an overly bearish time. Because for example, when the market is dumping, we usually see the funding rates reduce as more and more people pile into short positions and reduce their long positions. That lowers the funding rates, making it expensive to maintain a short position if the funding rates are negative, of course, which right now we are seeing a few negative funding rates across some of these exchanges. But when you're looking at the whole picture across the board, technically speaking, the funding rates still have room to the downside, because a lot of them are still in the red territory, overly positive. And so that just means that we could be due for a little bit more of a shakeout in the Bitcoin price before we can finally start heading back to the upside again. Because basically on low funding rates, especially negative funding rates, the risk to the downside is a lot less compared to the room to the upside. But the other way around, when the funding rates are really positive, then the potential risk to the downside is slightly greater than the room to the upside. Now, there's obviously exceptions to that rule. For example, when we're in the full force of a bull market, we often have some very high funding rates, and they can stay pretty high for quite some time if the price of Bitcoin is continuing to pump to the upside and feeding money into those long positions. But the moment the Bitcoin price really starts entering into a sideways consolidation or even a short-term pullback, those positive funding rates basically force the long positions to close those positions, which will start triggering stop losses and liquidation prices, which pulls down the price of Bitcoin even more. And that's basically what we've seen just here in the short term with the $700 million worth of long positions getting liquidated. But this is exactly what we need to maintain a healthy uptrend in the longer term, because the majority of people that panic sell or get liquidated at these lower values end up panic buying or FOMOing in at higher prices, which creates more buying demand at higher prices. And also with the reduced funding rates, it makes it cheaper to hold a long position, especially when we're eventually moving forward in this uptrend. There will be more incentive to go into a long position in an uptrend with lower funding rates compared to a long position in a short-term cool-off with higher funding rates. And taking a really quick look at the Bitcoin order books across all of these exchanges, what we're seeing right now is a pretty significant amount of buy orders coming in at around $55,500 US dollars. Other than that level, we're not really seeing anything too special in the order books. So keep in mind, at around $55,500, we could find a bit of short-term support at that level as well. And by the way, I gave you guys this alert hours ago, the moment Bitcoin and Ethereum started breaking below their support levels. And I gave you guys these new support levels to pay attention to. So if you want to get these extra updates throughout the day in real time, definitely make sure you're following me over on my Twitter. It's completely for free, and the link to my Twitter is in the description down below. And while we're here, I want to quickly say thank you so much to all 80,000 of you. Seriously, I can't thank you guys enough. In these short-term pullbacks in crypto, the subscriber count on the other hand is looking really bullish, and we've still got our huge goal of hitting 100,000 subscribers by the end of this year. And seriously, I reckon we could do that if we all work together, especially with any of you helping helping with sharing these videos around with your friends and family, especially in opportunities like we're seeing right now. These buying opportunities don't come very often. The last short-term call-off was this one back here, which wasn't anything significant. And other than that, basically the last short-term call-off, the last bearish price action was pretty much the month of September. So seriously, there's never been a better time to share these videos around with your friends and family to get everyone involved in this huge opportunity. But if you enjoyed this video or got something valuable out of it, make sure to drop a like on the video down below. And if you're new to the channel, you might as well subscribe with notifications turned on for more updates just like this every single day. As always, I really do appreciate all of your support. And for the new viewers on the channel, make sure you're checking out one of these uploads if you haven't already. I've got a trading tutorial video showing you how I trade crypto, and I've got a passive income video showing you how I earn passive income every single day in the crypto markets. But anyway, that is really everything I have to say for this video. I hope you all enjoyed, and I'll see you all in the next video.